Good morning. Ira Epstein with your morning flash update for this Wednesday, and we're now at the 2nd of July, 2025, 8:20 a.m. Central Time. You can see the stock market basically lower with the exception of the Russell. Now, this morning, when I was doing my morning subscriber video, I was talking to my traders about the fact that the bottom pickers are now showing up. In other words, the rotation pickers. They have plenty of reason to think the Fed is going to make a cut by September, and this is becoming now a market that you have to pay attention to. That's a big change from my prior strategies and one that is important. So it's a watershed event for me. Most of the metals higher, the copper market continuing on its way, a mixture of worries about tariffs on copper, what's going on at the London Exchange, and maybe a better economy in the second half that has actual demand for the product that is stronger. Keep your eye on what's going on right now in the energies. We expect that on Sunday, by Sunday, OPEC will say they're going ahead with another 400,000 increase, an additional one. But keep in the back of your mind this. Iraq and Russia are not living up to their goals of production for a reason. They're not being wise guys. They owed production. They had overdone production. That's the right grammar. And they had to make cutbacks in order to get in compliance with OPEC. So instead of getting your 400,000 barrels in May, plus an addition, about 150,000. That plays into the market. Pemex is in big trouble in Mexico. They are not producing anywhere near the amount of oil they used to. Bonds and notes, well, they're going to be just sitting here waiting on jobs. And speaking of that, we had some important data today. The first piece of data is my 40% off 4th of July sale. This ends very shortly. Any of my one-year subscriptions for research, 40% off. My courses, I have 3 different courses. The full charting, which is normally $600, $359.97. My Bollinger and Outside Day courses, they're normally $120, $72. So this is the great chance to get my information. Remember, these courses come with limited time to my full subscriptions, to what I write, my morning videos, and charting software. I mean, it's quite a package that you get. And I think you'll find all I got to do is get up an idea or two for you that pushes you in a direction you might be wanting to go. And you'll see what this is worth. I mean, these are steals at this price. So please take advantage. You go to iraepstein.com. There's an icon on the top here, 2 of them. You can click those to get where you're going as well. But getting back to the news of the day, we had the U.S. mortgage market recap, and as expected, the numbers were up. 2.7 on the index, up 1/10 on the purchase index. Refi went pretty aggressive, and it should. You went down 1/4 of a point on the 10-year notes, and that does relate right back into mortgages. Then we have mixed numbers today. Challenger Gray, the planned job cuts were half of what they were from May, 49% lower. That's bullish. But ADP, private sector new jobs, down 33,000. They expected 98 to 100. They fell 33,000. Now, that throws in where are you going to be for tomorrow's jobs report. And then you get your EIA weekly estimates on the oil stocks. That's going to come out at 9:30. So what we had yesterday, and let's get back to talking about that, was the fact that you had the JOLTS number jump 400,000 more jobs. We're now seeing that the ADP number's down 33,000 in the actual job hires. That's important. And Challenger's planning on less cuts. You want to talk confusion? This is confusion 101 in college. Nobody quite knows what this is. Do I think it moves the Fed at all? Not at all for July. I mean, they're going to look at it. Does ADP really tie into the U.S. jobs report? Sometimes yes, sometimes no. I don't know that there's a direct correlation that I'd want to make. I've watched it for decades. I'm not convinced it's there. The jobs report will be what everybody looks at, and that's what they're going to jump on. Dollar getting a little bit of a recovery at the expense of a number of currencies right now, which makes sense. You're adding yield back into the U.S. Treasuries, giving the dollar a bounce. And now you're wondering, gee, what's going to happen with that jobs report? That makes all the sense in the world. In the grain markets, corn is still in trouble, down another 3. Beans getting a little bit of a bounce. And the wheat, after a nice run up, pulling back just a little bit. So I will be back with you at the end of the day in our market reviews. I hope you look at the other videos I put up last night. In the meantime, good trading to you. I'll see you tonight.